I read my older blogs from time to time. There are lessons to be learned from history, and I often find things I said in the past to be useful reminders. This video is inspired by a blog I published in 2011. Back then, there was a bit of controversy surrounding a business trust called City Spring Infrastructure Trust. It was the catalyst for the blog in which I shared my losses, and how I recovered from losses to do better over time as an investor. When I finally fully divested from City Spring, which I no longer liked as an investment for income, I did not lose money. I was also spared the subsequent rights issue. So, the lesson was not to throw good money after the bad. At the time, I said the business trusts which I counted as heavy losses were MPSF and FSL Trust. Back then, I also said I would consider any 5-figure loss as a heavy loss. What about now? Since then, I have added another black feather to my cap, and that's the $100,000 loss in Marco Polo Marine. To be exact, it isn't that much since the company is still in business, and my paper loss is closer to 90% now, which means a $90,000 loss. It still stings. That was a few years ago. I have been more cautious since then. Also, these days, I am able to stomach low to mid 5-figure losses once or maybe twice a year without going into a depression, as my balance sheet is much stronger than before. What have I been doing since then to have a stronger balance sheet? Staying invested mostly in bona fide incoming producing assets while remaining financially prudent. Sounds boring? To many people, it probably is. I also speculated in some stocks along the way, but never in a big way, and, most certainly, without using any financial leverage. Now, with much pessimism surrounding REITs due to higher interest rates, I also found something I said in that blog from 12 years ago a useful reminder. I said that all real estate investment trusts I was vested in were back in the black. Many, like Ames Amp Capital Industrial, were in the red, but I used the price weakness in the crisis to add aggressively to my investments. Now, we call that the global financial crisis. Those decisions to add to my investments in real estate investment trusts were rewarding back then. This is a good reminder. If we invest in real estate investment trusts which are genuinely undervalued and have strong balance sheets, if Mr. Market should sink into a depression, as investors for income, it would be an opportunity to increase exposure. Doing what I did back then, the value of my stocks investment portfolio practically doubled as the world emerged from the global financial crisis. I remember one of my favorite investments made during the crisis was Highflux Water Trust, but it was privatized later. So, it was a forced divestment, but at a premium of 150% to my purchase price. I couldn't complain. Many of my better investments were privatized over the years. I also shared that I made some money trading stocks over the years. However, from 2010 to 2011, all the gains to my portfolio of stocks were from the hefty dividends received. Honestly, I booked some paper losses trying to trade stocks while the market was turbulent. Fortunately, the decision to focus more on investing for income paid off. Dr. Mark Faber said that the global financial crisis was a once-in-a-lifetime opportunity to make a lot of money in the stock market. Is it likely to be repeated in the near future? I do not know, and, hence, my current strategy of not being fully invested in stocks. There are many ways to achieve financial freedom, and my way is only one of the ways. It is the toughest at the beginning. However, experience tells me it should get easier with time if we are doing the right things. So, do not lose heart. Remember, there is no free lunch, and if it sounds too good to be true, it probably is. There is no shortcut, but do not cut short our journey towards financial freedom. If AK can do it, so can you.